Good morning, good afternoon, good evening, whenever you are watching this week's video. We are back. I am still Patrice L. Berry, EA, aka the Tax Cop, and this is our third week in March. Y'all, the beauty behind this is yesterday was my birthday. Yesterday was my birthday. I am 12. I know you're probably like, girl, and you've been doing taxes for 20 plus years. I'm telling you, it'll be reversing in age. It'll be reversing in age. No, I am the ripe age of 47 years old. I'm blessed and excited to be able to have made it to 47. Excited that the day after my birthday, I get to share a topic with you all and really break this down a little bit further. I'm just going to take a couple minutes of your time. Just take a couple minutes of your time. I'm going to take this messy bun down. Whew! So we can get into it. This week, we are going to hit, I'm going to call it step number 4, understanding the options you have for relief. That's what I'm going to call it. So last week, we talked about step 1, 2, and 3 when it comes to resolution, right? We did an overview the week before. Last week, we talked about 1, when you get the letter, open the letter, be it from the IRS or your state comptroller. Step number 2 was read the letter. And I mean every single page and kind of just absorb it. And step 3 is, if you are our client, share the letter with us in the portal so we can come up with our game plan, because you've already paid for audit protection, right? So that means that we're going to go to war for you. We're going to help write the correspondence to address the issue, especially if it's a tax return that we've done. Now, if it's a tax return we did not do, and it was before you was with us, before we went together, that's a different story. But if we already go together, you've already paid for it. So don't feel like you have to go on that journey alone. And it's going to make more sense with the stuff we're talking today. Today, I'm going to share the screen. We're at number 4. I'm going to share with you the options you have available to you by using a letter from last year from the IRS. Let's go there. All right, the tax tips. So this right here, hopefully y'all can see it. You can see it. We're going to make sure you get a link to this. It should be another one that comes out in, I'm going to say it comes out later on this month. It might be even coming out later this week. And if that's the case, we'll make sure we share it with you. But I want you to see what it is, okay? I'm going to make it just a tad bit bigger. I'm already at 160%. Let's go there, right? 170%, y'all. All right, so y'all can see it. It's options for taxpayers with a tax bill they can't pay. Meaning that you have a balance due, and y'all can see, don't pay attention to the dates. The rules still say that the topic we're talking about today still is what matters, okay? You have the option of, if you can't pay in full, I'm going to start with the beginning first. An extension of time to file is not an extension of time to pay. We talked about extensions before. Meaning that an extension is not bad. It buys you more time. But if you have a balance due, you need to go ahead and put some on that joint. But if it's a little bit too much to bear, which happens to us sometimes, life get to life in, okay? Then what we need to do is we need to know our options that are available to pay those balances due. If you cannot pay in full, you are not alone. It happens to the best of us. All right? And if you don't have a way to get on some money, liquidate a retirement plan, put it on a credit card that you got to pay them, hella high interest. I mean, I get it. It happens. But I want you to know what your plans are, your options are. Okay? My glass is dirty. I'm going to keep them off. We got 2 types of payment plans that you can be on. An online payment plan. You can be on a short-term payment plan, which is the payment period is 180 days or less, and you owe less than $100,000 in taxes, penalties, and interest. So we can be on a 6-month plan, right? Or we can be on a long-term payment plan. And a payment period is more than 180 days, so longer than 6 months. You pay it every month, and the amount owed is less than $50,000 in combined tax. Now, there's other ways for them to split this up. You're like, huh? Patrice, that don't make any sense. I just want you to know. Hopefully, everything's being recorded because my system audio. No, I'm good. I want you to be aware that there's stuff in the background, that you have the option of paying over time. That's the biggest thing I want you to take away. You have an option to pay over time. So one of our remedies is to go into a payment plan. We are going to pay in full. We have a payment plan. The second thing that you hear on the radio all the time is an offer and compromise. That's where they talk about paying pennies on the dollar. But if y'all see this, and I've talked about this in a podcast before y'all talk to anybody else, I'm not trying to be funny. I'm not trying to take money away from nobody. I'm not trying to stop anybody. And I know stuff gets uncomfortable. Go to the offer and compromise pre-qualifier tool to see what the IRS says about whether or not you even qualify. Because I want you to know, so when you go to call or work with someone like myself or anyone else, that you are in a position to be successful and to talk with some knowledge. So it does not hurt to go to their free offer and compromise pre-qualifier tool to see what it tells you. Sometimes it'll tell you you're a perfect candidate. Sometimes it'll tell you you're not. We have an old podcast where I got to figure out what season it is. We'll put it in a newsletter that I did last year, where I actually walked you through the offer and compromise pre-qualifier tool, because I want people to be prepared. Okay. Then we have something that's not on here that's called currently not collectible. If you are having a financial hardship and stuff is hard, now they're going to want to know your business. You're going to have to do a financial statement and cough up the information to show that right now I'm in a financial hardship. Can you put me on hold in a currently not collectible status? Okay, that's a CNC, currently not collectible. And then we also have penalty relief. Okay, so I talked about payment plans. There are different options of those that they, chop and screw them. Offers and compromise, a currently not collectible, and penalty relief, right? So penalties can be abated or relieved. And we either have a first-time penalty abatement. They say, oh, you've been a good taxpayer. You've done everything. You pay your estimated taxes. You do your withholders. You do it on time. We'll give you this first-time penalty abatement. Or because life gets to lifing, there's certain things that will allow you to get a reasonable cause penalty abatement. And either one can happen. And definitely we write letters for those. We do correspondence for those. All right. Here's what you need to know about interest and penalties. Taxpayers who owe tax and don't file on time may be charged a failure to file penalty. This penalty is usually 5% of the tax owed for each month or part of a month that the tax return is late, up to 25%. The failure to pay penalty applies if a taxpayer doesn't pay the taxes they report on their tax return by the due date. So you got a failure to file, failure to pay penalty, and they incur interest. Okay? And the penalty gets bigger. Interest is based on the amount of tax owed, and for each day it's not paid in full, the interest is compounded daily, so it is assessed on the previous day's balance plus that interest. Interest rates are determined every 3 months and can vary based on type of tax. For example, individual or business tax liabilities. More information is available on the interest page. We are going to share this link in the video for you. This is a little bit longer video. We're going to share this link so you know where it is, so you can get those live links and you can get access. My biggest thing is I want you to know what your options you have when it comes to relief. Number one, payment plans. And it depends on the amount of owed and the amount of time you need. Number two, offer and compromise. And I highly encourage you to use the IRS offer and compromise pre-qualifier tool. Number three, you might be in a financial hardship and you can't even squeeze nothing out, right? So we're going to put you in a holding pattern, and that's called currently not collectible, CNC. And then fourth, there is ability for you to get a penalty relief, either a first time or a reasonable cause. Okay? So those are our remedies that are available when we can't pay that balance in full, because life just does what it does sometimes. And sometimes we just don't plan and it gets us. I will tell y'all, honestly, I've had to pay the IRS 5 figures twice as an adult. Thank God I had a way to get the money. I've had to pay them 5 figures twice. I'm not going to tell you I always get refunds. I don't. I've had to make payments, but I use these tools available to make sure that I can get it taken care of. Okay? Got any questions? Y'all know how to hit us. And stay tuned for next week's video. We are looking forward to breaking it down even more when it comes to how to maneuver in these tax streets. Until next week, peace.